Hello, my fellow Extraordinary Americans. I'm Cosmos Dar, and this is Extraordinary America. What is Extraordinary America about? You see, American identity is about freedom, the opportunity for a better life, and the pursuit of happiness. Welcome to Extraordinary America. Today's guest, we have Paul Gabrail. Paul Gabrail is a principle-driven investor whose wealth-building strategy relies on value investing. He's also the host of Everything Money, a digital show investment education YouTube channel that teaches his audience how to build long-term wealth through stocks, real estate, and business development. Born in Mosul, Iraq in 1981, Paul and his family moved to England when he was 6 weeks old. His parents, both doctors, received extra training while in England, and 3 years later, while vacationing in the United States, they sought and got political asylum. The family moved around in the States for 6 years until settling in Ohio. Paul started investing during the internet go-go days of the late 1990s, and he participated in an investment club and became familiar with billionaire Warren Buffett, and something clicked in him. He graduated from the University of Michigan in 2003 with a degree in economics, and in 2004 started what eventually became the Crossroads Group, investing in apartments in the Ohio area. He also purchased homes, renovated and rented them, and always a step ahead, while everyone shied away from real estate and stocks in what they considered toxic investments during the great financial crisis in 2007 2008. Paul invested heavily in both buying hundreds of apartments and in millions of dollars in stocks, which has proven to pay off. He's an extraordinary American, and I'm glad and honored to have him on the show. Paul, are you there?
I'm here.
Paul, thank you so much for taking the time to do this podcast with us. I'm really honored. Can you tell me and the audience a little bit more about yourself, your background, your story, and how you got started?
I think you pretty much covered it in our I assume that was a bio probably off our website. I just was always interested in numbers. I remember as a kid always being very fascinated by numbers. I couldn't sleep when I was 5, 6 years old until probably college. It was hard for me to sleep. So I would try to think of shortcuts on how to do numbers for no other reason than just boredom. Um, of course, at that time, everybody wanted to make a lot of money. I just wanted to be really rich, and I was trying to learn how to invest. And one thing led to another. The one thing that's different for me versus I get really irritated when people say, "Well, I'm a stock investor. I don't do real estate. Or I'm a real estate investor. I don't do stocks." Or I have a business. I look at all three as a way of building wealth, and I like a diversified holding of all three, and that's why I have all three. And the last few years in stocks have been, since COVID has been very difficult because of the high flying market. And I own I own over 1,000 apartments. I have 26 or so stocks, and I have 7 or 8 businesses. 3 or 4 are really the main focus of our company. But yeah, that's where we stand right now. And I'm 43. I started the company in 2004. I stepped down as CEO 6 or 7 years ago. My brother took over, and I've been enjoying life ever since.
Well, Paul, so it's obviously you've had a lot of success during your time, like investing in stocks and real estate and also doing business. So, what was your strategic vision that and motivational factor that led you to do all of this in the first place? Because like most
I
people,
wanted to be
like,
rich. I wanted to be rich.
was there something more than being rich, or was like the
No,
motivation?
that was what started me. I just wanted to be rich. I didn't. Now my goals have changed, but back then, if you asked me why I wanted to be rich, that was it. That's all I cared about. That was a very different version of me than I am today, but that's all I cared about back then. I'm not this guy who's going to try to sugarcoat it from back then. Today, my views are very, very different, 180 degrees almost. Not 180 degrees, but call it 150 degrees. But that's back then. All I cared about was how do I get rich?
So how from back then you wanted to be rich, but what is your vision and like your goals now, and how is it different from back then?
I want to be satisfied now. I have more than I need now. So my goal in life now is just to enjoy life and only do the things that I really truly enjoy. Luckily, I really enjoy investing. Luckily, I really enjoy investing in businesses, real estate, and stocks. So, for me, that's a good way to generate income, but I don't need more income. I do it because I want to do it. And I mean, it's hard. I don't want to be broke tomorrow. But before it was all about how do I accumulate as much as possible, as fast as possible. Now I'm more of the how do I accumulate um how do I accumulate consistently and only do the deals that I really feel comfortable with? Because the money will take care of itself.
So, Paul, well, one of the questions I had for you was how did you scale your business to where you ended up doing 1,000 apartments and doing all of this in like stocks and real estate? Was there like a strategy that you had that allowed you to
Yes.
mitigate and like mitigate risk and
No.
consistently?
The strategy I had was be born into the right family. My parents were both doctors. They did very well. That's how I started. No shame about that. I love it when people criticize that. I was like, listen, it's a lot harder to start with money than people think. I'd rather start with money than not. But when you start with the cockiness in me says when you start with an emotional ability to do the opposite of what everybody's doing, and I don't have any addictions. I don't have any drug addictions, alcohol addictions, gambling, nothing. I have an addiction to investing. It's literally an addiction. Like I get a dopamine rush when I invest capital in something. And it helped that I had a well-to-do family that believed in me and supported me. And the rest is now we're starting to raise money from investors for our real estate deals, but we started all with our own money. And how did I mitigate risk? I just didn't buy what everybody else was chasing. It just made sense to me not to. I didn't have some pre-thought out plan of that. It just made sense to me that, well, why would I buy this real estate over there and get a 5% return? I can buy that one over there and get an 8% return on cat like a cat. It just doesn't make sense to me. So I didn't do that. Why did I buy a company in stock that just because the stock was going up, but the fundamentals weren't going up as much? That didn't make sense to me. So I didn't do it. That's it.
So Paul, a question as a follow-up to this. Like, let's say, like, if somebody wants to invest in real estate and they want to be like you, where they end up like getting like 1,000 apartments, but they have a certain amount of money and they want to start with one. How would they go about scaling to where they're successfully expanding their real estate holdings?
You got to bring up partners. So how you bring up partners is you do a few deals on your own, show a track record, and then go out there and ask friends and family, and the network will grow. That's the only way to do it. Just like now, it's funny when we go raise money now, one of their bragging points is the first 1,000 units we did were all with our own money. We made our own mistakes on our own money. And I had plenty of mistakes in real estate. We did it with our own money though. And now when we go raise money from investors, it's a much easier sell because we already have 1,000 units that we bought on our own.
I see. So basically, you have to get partners. But my question is, how would you mitigate a risk financially while you're getting partners in? Because there's always like a risk component to it. So is there like a strategy you have to do when it comes to that?
What's your definition of risk?
Financial risk, like okay, you invest in like let's say like in something with a partner, or then the partner does it, or like they lose money, and then now you have to deal with the fallout of that.
Don't lose money. Listen, I'm not, I view risk as purely the price you paid. If you overpay for something, that's risk. If you underpay for something, if you overpay for a good thing, that can be more risky than underpaying for a bad thing. Obviously, there are limitations to that. You got to, you should. Warren Buffett and Charlie Munger always speak about buying in top quality businesses, and the perception is you might be overpaying, but you might not be overpaying because it's a top quality business. I never invested in the hot markets of New York, California, all those things. To me, those are risky. Why? Because you were paying a lot more money to get the same revenue and profit than you would get in the Midwest. That to me was how I mitigated risk. I just paid a lot less for revenue and cash flow. That's it. Understanding what you're buying and why you're buying it, understanding what drives value and how that happens over time will make you a lot of money. But if you're just going based on I got to go to the hot markets because everybody's there and it's going up, there's going to be a problem at some point. We have a lot of people who follow our real estate channel, and people in the hot markets, I look at them going like, damn, they have to make quite the assumption in order to get a good return on their capital. It could work in certain pockets, but I look at it over long periods of time. Have a longer outlook. Don't don't look at just a quick money making scheme. It's not going to work. It'll work. It can work temporarily, but it's not going to work in the long run. So whenever people talk about mitigating risk, I think it's um it's a that's like saying to me well, how do I avoid mistakes? It's like, well, just don't make them. But then how do I really don't make the mistakes? Well, you got to understand what's going to drive the value of your property, and you got to understand what you're buying and the returns you're making. One of the most common mistakes I see from real estate investors, for example, is when they buy a single family home, they go, "Oh, great, my rent's 1,500, my mortgage, tax, and insurance are 1,400. I'm netting $100." No, you're not. You're going to have maintenance repair. You're going to have vacant utilities. You're going to have grass cut. All these things are going to happen. You might not make as much as you think, and people don't understand those numbers. The understanding what you're buying is the and paying as little a price as possible for it, as hard as that is a way to mitigate your risk.
No, I mean, yeah, I see what you're saying, and yeah, the reason I'm asking is so like because there's a lot of people that are watching this that would want to be get into real estate investing and they want to get into like stock market and they're there, but they don't have like the right guidance and they don't have like the right mentors on how to go about because like one of the things I learned during my journey is like mentorship is key in order to fast track your forward to success and going to the right areas for getting knowledge regarding business and investing is key, and which is why I appreciate that you have your Everything Money channel because it teaches a lot about that.
Yeah, I never had a mentor. I just had my own mistakes as my mentor. You also have to, I think a lot of people so badly want to say I have a mentor. Like I've had people call me a mentor, and it's kind of cringy for me. And the reason being is you got to find somebody who makes sense to you when the way that the way they look at the world. Everybody's going to invest in different ways. The things that make sense to me might not make sense to you. The things that make sense to you might not make sense to me. But if I try to emulate the way you do things exactly, I'm going to run into problems at times because part of being good at investing is being able to understand how you can make and lose money. If you don't understand how it's going to happen, you're going to freak out when you're losing money. And when you're making money or somebody else is making money and you don't understand why they are, it might make you jealous. So understanding what's going to make you money is the ultimate in confidence. Mentorship can be important. Of course, I'm biased. I believe in mentorship, but I'm biased. I never had a mentor. You know what I mean? I had many people who say to me they want to be my mentor. That was only because, you know, they sell me on the fast track. And it was kind of like, oh, let me get this guy under my wing. And I never took that because I want to do it my own way. And I thought that the things that made sense to me made sense to me. Um, I don't know. It's I wonder sometimes if the mentorship thing is kind of one of the things like saying leverage and synergies and things like that. It's like things we love saying, but at the end of the day, having a mentor is wonderful, but you got to go out there and implement. You got to go out there and get things done. I believe in surrounding yourself with several people that are like-minded, not just one person. Um, and when I say like-minded, are they thinking the same way? Are they doing the same things? When I say the same things, like, are they actually getting things done? Many years ago, I remember I met with somebody who was starting a business, and she was bragging to me about her board of directors. I go, "What's your revenue?" "Oh, we don't have revenue yet." "Oh, well, where'd you start your business?" "Oh, we don't have a business yet." I'm like, "So why do you have a board of directors?" "Well, it's very important for me to have the right people around me." I'm like, "No, it's important to start. Then how do you know what people you need around you sometimes?" And so sometimes you need somebody to help you get started. But I was looking at her board of directors saying, "Nobody's told you to go start now." She's like, "No." I'm like, "Oh, well, for me, that didn't make sense." You know what I mean? Like for me, I was like, "No, go get started, go fuck up, go make a mistake. And then from there, like you'll have some things to go, hey, I tried this didn't work. I tried that. Well, have you thought about this? You haven't started yet. Like get the ball rolling on something. If you have 100,000 saved up to buy a piece of real estate, spend 25 buying something. Because if you screw up, you probably won't lose a lot of money, if any at all. So go try that, start something, watch some videos, understand what you're buying, get a group, but really go out there and get started. If you lose even half that, you'll survive. You'll survive losing half that, but just make sure you know you're not going to blow your whole 100,000 on something. That's the whole key there.
Paul, I love that you have like this action oriented, like jump into the water and then
Yeah,
swim and then learn from there. Because like a lot of people have like the other type of mindset where they want to test the waters and they want to first see and observe and then go slowly. But obviously your approach has given a lot of success. So
I think mine is going slow. I think everybody else is just not moving. Like to me, you're either moving or you're not moving. And there's some people who are addicted to learning. If you're addicted to learning, it's going to be hard to pull the trigger someday. But people got to remember there's no perfect scenario. Like I just had one of my partners upstairs say to me like, "Oh, I just hate failing. I don't like to fail." I'm like, "Well, that's stupid." I literally said, "Well, that's stupid." He laughed. He goes, "I know you think it's stupid." I'm like, "You got to be okay with failure." Almost the point of like almost forcing failure, but you got to get started. If you're just addicted to learning all the time, there's always some other time you can, oh, I'll do this stuff. Then you're never going to get started. You got to be honest with yourself about what you are. And a lot of people are just, they just really like talking about doing things, not actually doing things.
No, I mean totally. And Paul, what are some like the biggest lessons you learned during your time in the real estate, like during your time investing in real estate and investing in stocks?
In real estate, don't ever trust a realtor or broker. You have to make your own decisions. If they're talking to you, they're lying to you. They just want to close the deal. Never hire a third party manager. If you're not going to manage it yourself, don't hire, then don't buy the property. Third party management is one of the biggest scams of all time. I've had 10 or 12 third party managers work for me. Every single time I fired them, revenue went up, expenses went down, profits skyrocketed. Absolutely terrible. They're never going to watch it. They're going to be too distracted with all the properties they're managing. So that's it for that's real estate. Those are the two biggest ones. And everybody's like, oh, a real estate agent or broker knows the market. No, they don't. They don't know the market. They never know the market. They might know what's for sale in the market, but they don't understand how real estate. I should say they're not investors. That's what I'll say. For stocks, um, you have to be okay looking stupid. When I say looking stupid, like you have to be okay with not buying something for the right reasons and it going up a lot, or buying something for the right reasons and it starts to fall. And are you okay buying more? That's the hardest part about stocks, unequivocally. If you can't do that, stick to low cost ETFs because you're betting on America. You're betting on 500 companies. That's good. Do that. But when it comes to individual stocks, you got to realize that when you buy a stock, you're probably not going to buy it at the bottom. So if it goes down further, are you able to buy it even when it's falling if the fundamentals are the same or getting better? If your thesis is the same or getting better. Not many people can.
So, Paul, one of the things I noticed, like, for the 2007, 2008 financial crisis, right? That was a time where everybody thought that was a bad financial time, but for investors, it was a really great time, because like when the chips are down, when everything is at a low price, like invest and they succeed. So, from your perspective, like, for the sake and for the, how would you advise somebody like when there's like a financial crisis coming, which I feel like they will happen like within few years time, like how should they go
Maybe.
about investing and allocating their resources accordingly during such a time?
If you can't pick individual stocks, buy the market. Because at the end of the day, if you think the market's going to zero, you might as well buy because it's going to zero. None of this is going to matter. If the markets actually go to zero, none of this can. Now, individual stocks can go to zero because they're bad companies, like they did in the financial crisis. Lehman Brothers, Bear Stearns, etc. But if you really thought the market was going to go to zero, I tell people, then just buy the market then. Well, Paul, I don't want it to go zero. Well, if it goes to zero, your money's going to mean nothing anyhow. So you might as well buy. More want more Buffett. Psychology of Money. Morgan Housel has a great quote. Every past crash looks like an opportunity. Every future crash feels like a risk. No, every crash is an opportunity. If you don't know what to buy individually, buy the market. Buy S&P 500, buy QQQ, buy something like that because you're betting on the entire US economy. If you think it's going to zero, then why even have money? Why even have a job? Like just it doesn't make any sense, but we get caught up in the emotion of it. When I was, by the way, also my other thing for real estate is don't trust bankers. They don't understand real estate either. Um, these are the same bankers. I used to make fun of bankers because they would lend $150,000 on a property in 2006. Then in 2010, I'd be buying for $5,000 and they tell me they can't lend me money because it's a toxic asset. So I would say, so wait a second, if $5,000, it's a toxic asset, and $150,000, it's a great investment. Got it. Just didn't make sense to me. But I got to have those. I have to have those mispricings in order to make a lot of money.
No, I mean, people have a lot of opinion on like bankers and like basically like with regards to like as we were talking about the financial crisis, like there a lot of people are like thinking that there's going to be even more inflation and there might even be hyperinflation. So they're thinking of like investing in stuff like gold and silver. Some people are thinking of investing in like say like cryptos. But from your perspective, as some if you had to advise somebody on a portfolio of investing, and like how would you go about advising them in like for the
S&P
next?
S&P 500. That's it. If you want to buy individual stocks, you've got to be good at understanding financials, and you got to, more importantly, the most important one is you've got to have a stomach to be able to watch your stock fall. I own PayPal. Yesterday, PayPal went down 12%. Guess what I did? I loved it. I was like, oh, good. It's getting to the price again that I can buy more. That's what I thought. Most people thought, oh my God, PayPal's down. Okay. People in our community love it when the stock is down a lot. I bought Adobe and it fell to 403 and I was excited. And then it shot right back up to 435 and I was like, ah, crap. So, these things, I bought Sprouts Farmers Market at 32, 33. It's up to 160. That does not make me happy. That truly does not make me happy. I'd rather have it stay at 30 for a long time as the business gets better and better and better. And I just keep accumulating more and more shares. That's the hard part about buying stocks. That's the only time you should buy individual companies. If not, you can make very good strategic purchases by dollar cost averaging and low cost ETFs. If they're selling from below historical metrics, fundamentals, buy more. And you can buy like QQQ for more aggressive when things make more sense. I think there's just two that if you believe in crypto as an investment, just I don't know what to tell you besides you're not an investor. That's it. It's purely speculative. I don't care what anybody says. It's purely speculative. I look and people say, well, so is a dollar. I agree. But the dollar is backed by the US government. I don't invest in the dollar because I don't look at it as an investment. I look at it as a way of me to buy goods and services. It's not an investment. Investment to me is something that if the market for it went away tomorrow, I could still make some money off of it. And that's the way you get it with stocks. If the stock market went away tomorrow, every company I own would still increase their revenue, increase their profit, make their balance sheets better. And 10 years from now, the market opens up again, those companies would be worth a lot more money. Real estate, if I have an apartment building and I couldn't sell the apartment building for 10 years, I'd still make money off of it. It would still grow in value. Now, that value I probably couldn't get for 10 years. With Bitcoin and crypto, there's nothing. If it goes away, if the market for it goes away tomorrow, what's it worth? How do you make the market goes away for tomorrow? It's useless. It's absolutely useless. It's gone. It's just, what's the purpose of it? So, if people will get rich just matching the market, that's all you got to do. Just match the market. You can do that with low cost ETFs. It's not sexy, but you know what is sexy? The wad of cash you'll be sitting on at the age of 65. That's sexy. Because most people underperform the market by 3 or 4% over their lifetime because they jump into stocks at the wrong time and they sell stocks at the wrong time. That's hard. That's what happens.
No, I really find your take on crypto interesting because like I like interviewed like some other people and they actually had like quite the opposite opinion. But
Yeah, you know what they're called? You know what they're called? Morons. Every crypto bro in the world who says they're a crypto expert, that's how I know you're stupid. The second you say you're a crypto expert, I just go, okay, you're brain dead. You're a dummy. It's no coincidence that all the best investors in the world don't like crypto. If I hear one more person tell me Bill Miller, I've never thought Bill Miller was a good investor. He beat the market 15 years in a row. Got it. I get that. But since then, he hasn't done much. And 15 years in a row has more to do with the timing of things versus actually buying good stuff. I don't consider him a good investor at all. Well, maybe I'm wrong. I don't like his process. Even Warren Buffett, in recent years hasn't outperformed the market. I just look at crypto. If you're a crypto enthusiast, I just think you're brain dead. And this will
so
probably go down in history as a great comment. I don't think crypto in its current form makes it. Now, maybe it gets adopted in some other form and people go, see, I'm like, okay, but it's not going to be the way they think it is. It's not going to 10 million a coin. It could, I should say it could, but it'll be based purely on speculation.
so when people say that Bitcoin is kind of like digital gold, like what is your opinion on that?
Gold has other uses besides some sort of value. We use it in products. We use it for jewelry. We use it in a lot of other things. Bitcoin is not. And other cryptos, they pop up every second. Pop up every second. Like, okay, could Bitcoin be the crypto? Sure. But it's got to get adopted. For them to get adopted, I finally saw one person, finally a crypto bro, finally admitted this on Twitter. He said, listen, guys, I like crypto, but we have to all admit that crypto is not what we originally intended it for. It was supposed to be off the radar, no government regulation, all these things. Now it's on the radar, fully taxed, full government. It's like, guys, the whole intention of crypto, I love the whole intention of crypto. I love the idea of having a decentralized currency. It's a brilliant idea, but so is communism. But communism, I'd love for you and I to always live a great life together and always work as hard as we need to work for the greater good of everybody. But at the end of the day, there's one problem. We're humans. And we actually don't want to work more than somebody else can live the same life as us. That's why communism doesn't work. It's the whole joke about, in theory, communism works. In theory, crypto works. Oh, great. You have this guy, but guess what? The very thing they wanted to do had people who pay in crypto. And so look at it this way. How many stories do you hear about people losing their key for crypto and their crypto is gone forever? Is that really the world you want to live in where you have $10 million of your net worth tied into something where you lose that key, it's gone forever? I don't want to. If you want to, more power to you. But it's going to end up being bad. You're going to have people very, very upset. And then you're going to do, we want more regulation. Great. That defeats the purpose of crypto.
So Paul, like for like the current generation, right? Like as when they're, let's say they want to become like a great investor like yourself, and they look at the current world with technology, the rise of AI, and then cryptos, and then there's gold, and like they don't know how to go about doing investments and everything. Like, how would you go about advising such a person on like what leads to a successful investor versus somebody that's not as successful?
So first off, I don't consider myself a great investor. I consider myself a principle driven investor. What that means is I don't care if my assets don't do as well in the short run and do average in the long run. If I like what I'm buying and I buy for the right reasons, I'm okay with the result. That's what's most important to me. If I take on more risk for something, I want to get more gain for it. If that works out, great. I took on a lot of risk in 2008 and 9, perceived risk in buying real estate. Banks were not lending. I had to pay cash. If I stuck with those things in just cash forever, it would have done okay. I was waiting to say eventually the banks will turn around. And guess what? They eventually did and started lending money. And I made a killing because of that. But if they never did that, let's say forever banks never lent money on real estate, I would have done okay. I would have done 12 or 13%, which is really good for real estate, for having paid off real estate. But it wouldn't have been really good for real estate overall. But now that banks started lending more, that was my entire thesis. Banks went from we're not lending to they finally started lending 2 or 3 years later, and then my returns skyrocketed. To be a good investor, it's not just about getting a lot of returns. If you can get a lot of returns by taking on debt, that's not a good investor. If I can get 15% by putting 40% down on a piece of real estate, but you need 10% down payment to get 20%, my return's better than yours. Because even though I'm getting a lower return, I have much less risk involved. I'm getting a much better risk adjusted return. Being a good investor is not being disciplined, not making as many emotional decisions. When you buy something, understand what you're buying, why you're buying it, and the reasons why you might sell it or keep it or buy more of it. Those are the things to be able to do. But making reactions based on what other people say, I always joke with my friends. I want to hear what they talk about with investments because those are the things I want to stay away from. If I hear them talking, I always joke with people. I started buying PayPal. I was interested in PayPal. And there's a guy on the internet who has a channel who I do not respect at all. And he likes PayPal. And I'm like, oh, crap. What am I missing? I'm probably wrong on PayPal. If he likes PayPal, then it's probably wrong. Like, that's only how I think. If he likes it, then it's got to be garbage. You know what I mean? Like, by the way, I didn't sell PayPal. I just kind of made that joke. It's kind of like a joke. But the point was, I want to buy things that people are like, that's a stupid buy. Okay. That's fine by me. You know what I mean? That's hard to do. It's very difficult to do. But the same thing that everybody told me I was stupid for buying in 2000, I bought an apartment building in 2009. Sorry, I bought an apartment building in 2009 and 2 homes in Mexico in 2012. The apartment building in 2009, everyone's like, you're stupid. I paid $3 million for it. It recently appraised for 25 million. The 2 houses in Mexico I bought 10 years ago, my lawyers were begging me, don't buy in Mexico. It's terrible, it's dangerous. I've been making 20% returns on those houses since back then. And they're worth double what I paid for them. If that's happening to me, I'm like, okay, it's probably something to look further into. Doesn't mean they're wrong, but most people are wrong for the wrong. Most people are wrong because they don't know. They just go off emotional responses. And I believe that if everybody hates something, that's the time to take a look at it. Because if everybody hates it, it means it's cheap enough or it's getting cheaper. 70 or 80% of the time is the reason why everybody hates it. 70 or 80% of the time, they probably are right. But it's that 20 or 30% where you can make a lot of money if you're able to go against the grain.
Yeah, the part where like what you just said about if people, the masses are going in one direction, you have to go in the other. That's the key to success in investments, and that's something that I want to hone in on the audience because if you want to be a good investor, I think one of the things is you have to go against what the majority of the population are thinking at that moment.
We see it all the time. Look at PayPal is at $310 a share. Look at Alibaba is at $310 a share. Look at them now. Alibaba's at 100, PayPal is at 77. Yet they both have more revenue and profit than they did when they were at 310. Go figure. Why? Perception has changed. Okay. Nike, Nike at the all-time high of 180. It got down to 70. Had more revenue and profit. Okay. I mean, anybody who tells me otherwise, you can't tell me you liked it at 180 and now you hate it at 70. It makes zero sense to me. And when it's at 180, I guarantee people would say, I'd love to buy it at 70, but they don't. You know why? Because then the news starts to come out because news follows the stock price. When the stock falls, all the negative news comes out for it. The negative news is always there, but the news always follows the stock price. If the stock price is going up, all people care about is the news that tells why is the stock going up? The stock's going down. Here's the news as to why it's going down. You got to be able to say, no, fundamentals are getting better. I'm going to keep buying it.
No, totally. And Paul, I wanted to ask about your YouTube channel, Everything Money, because I know you have a YouTube channel. So can you tell me and the audience a little bit more about this channel and the premise of how you got it started?
Yeah, so it actually started as a podcast sitting here at this desk, and we just interview people, and we got like 400 or 500 listeners a week. And then one day, somebody in the office said, "Paul, we should be on YouTube." And I was like, I never watch videos. To this day, the only videos I watch are like music videos. Like I literally love watching music videos, or I'll watch, I'm dabbling guitar, like a video on how to play a song on guitar. So the guy said, let's go on YouTube. I said, let's try it. So we did it. We had a great setup. We were very classy, and people were like, damn, you have a nice setup. I'm like, yeah, because I like teaching. Let's do this. And then it just started to snowball. For January 1st, 2020, we had 83 subscribers. December 31st, we had 8,300. The next year, in December 31st, we had 83,000, and it just keeps growing and growing. I had software that I made for myself, and then every time I used it, people would say, hey, how do I get that software? I'm like, well, you can't. It's a data feed, blah, blah. And finally, one day I said, let's just make it for people. So we did, and it's been very successful. We have thousands of people in our community using our software every day. The software is what I use every single day to buy stocks and buy real estate. Last year we closed on 30 some million in real estate that we used on our real estate calculator. It's in our software. It's everything that I use for me. I just make it for everybody else. That's it. Because I figure if it's good enough for me, it's good enough for everybody. And that's it. That's all it was. And the YouTube channel just keep growing. I love talking about the things that make sense to me. I love being wrong and right in the public image. It's fun to own your mistakes. The only hard part is everyone is so short-term oriented. And the hard part for our channel is we're really looking for long-term oriented people. That's few and far between. You know, I still get messages people saying, Paul, thank you so much. I was up 27% because of you. I'm like, no, you weren't. You're up 27% because the market's up 27% or 20%. You're going to do it well in the long run by owning this principle driven investing idea and buying things that make sense to you. That's when I want the accolades. Call me in 10 years and say, Paul, because of you, I beat the market by 2% a year. Wonderful. And even then, I wouldn't say it's because of me. I'm just teaching what makes sense to me. If it doesn't make sense to you, don't do it. If it makes sense to you, do it. There's a lot of people in our community who buy investments that don't make any sense to me, but they still do well. One of the guys in house here, he's making 21% a year for the last 3 or 4 years, and I don't buy his stuff, and he crushes me. I love it. None of his investments make sense to me. That's it. It doesn't make sense to me. I don't mind losing on that. If it doesn't make sense to me, I don't mind losing out.
Paul, I mean, that's amazing that you have this YouTube channel, you're educating and showing people how to invest. And I would definitely recommend my audience to definitely take a look at your channel and to get more understanding of how to invest, especially when it comes to stocks and real estate. And Paul, are there any other projects that you're working on that you'd want the audience to get a glimpse into?
No, I don't think so. I've really dedicated my life, since starting all these businesses, I'm very fortunate to have everything I need and want. So I'm really trying to make it all about my time in my family. I'm recently married. My wife has adult children who have kids, and we spend a lot of time with the family and kids. So my project in life is how to enjoy life with them as much as possible, and how to enjoy life investing because that's a lot of fun, and build this channel. Like I really do believe this channel is going to have 5 or 10 million subscribers at some point in the next 5 or 10 years, and I want to teach people a different way of thinking. That's there's 8 billion people in the world, 8 point whatever billion people in the world. If I can help 5 or 10 million of them become better at thinking, great. And along the way, I'm going to change my way of thinking. It's already happened. The 5 years since the channel started, I've changed the stocks I buy. I used to buy, small companies that had big upside potential, but then I'd sell. No, I don't want that anymore. I want to buy companies that just grow and grow and grow and grow and grow. I don't have to I'm going to make less money, but I'm okay with that.
And that's amazing, Paul. And I actually wanted to ask you that another question about regarding happiness, because the American
Yeah.
identity is about the pursuit of happiness. And you said at the beginning your main drive was to get rich, but now it's about something else. So, from your perspective, how should people go about pursuing happiness? Like, is it all about wealth, or should they look at other avenues when it comes to happiness?
Well, listen, being able to pay your bills and being able to retire and being able to support your family can can create a lot of contentment in life. Um, to think that somebody with 100 million is 10 times happier than somebody with 10 million is a fallacy. Um, you've got to find the things you enjoy doing and the people you enjoy being around. That's hard to do. I remember this first sparked me about 12 years ago. I remember finding immense happiness when I would go on a weeknight and play tennis. Because I thought to myself, what a luxury I have that I can literally play tennis anytime I want. Walking into the tennis club, putting my bag down at 6:30, 7 o'clock at night, being able to go play. My wife and I travel a ton, probably 60 days out of the year. That's like immensely satisfying to me that we can just choose anywhere in the world we want to go and go and enjoy it in a very like high end fashion. Um, the traveling part's very beneficial. Being able to make sure that being able to make sure our kids always have um, safety. When I say that, I mean like the right car. Like we don't pay for our kids' cars, but being able to tell them if they weren't able to afford nice cars, being able to tell them, hey, we'll pay for part of the car so you have a safer car. Those small things are like, and when I say that, I don't mean like buying a Range Rover. I mean like, hey, buy a Volvo that's $45,000. Nothing glamorous, but it's something that's, hey, you need that versus a small 2 door or 4 door car. You have a family now. Those are the things that really provide a lot of happiness for me. Being able to help, the people I love and care about. And that's not cliche. I'm not saying that from a fake standpoint. I say that from a complete honest standpoint. You know, and not caring about being uber. When I say uber rich, like multi-billionaire tomorrow, enjoying the journey more than enjoying the end result. My life used to be all about the end result. Now it's becoming more about the journey. I still have a lot of end result kind of like goal, which I hate, but I'm working on making it all about the journey. I was telling somebody about 3 years ago, I said this in passing, and they're like, wow, that's different. I would never go back to 10 years ago, and I'd never go to 10 years ahead. I love exactly where I'm at today. And I realized that probably 3 or 4 years ago. But my old college roommate of mine yesterday said, oh man, remember the good old days of college? I go, no. So what do you mean? I said, I would never go back to college for anything in the world. He goes, Paul, it was so much simpler time. I'm like, no, it's simpler now. It's like, God, it's so aggravating now. I'm like, not for me. And I'm sure he thought part of him was like, well, you guys have money. Like, no, it has nothing to do with that. It has to do with like, because before I had money and I still thought the future is going to be better. Now I'm okay with it. I like getting older because I feel like life is more enjoyable, but I like the things I'm able to do along the way. Like every single day going to work. Like I don't dread work. I love going to work. I don't dread anything in my life besides, actually, I don't dread anything in my life. Do I dread anything in my life, Nick? Have you heard me complain about anything in my life? No, I don't think so. And by the way, that's from a years and years of realizing that I wanted a lot of money. And as I got a lot of money, I realized my happiness wasn't increasing with it. In fact, it was probably making me more anxious and frustrated. So, yeah, I just had to learn, like, okay, something's not right here. I just started reading more and thinking more about things. And, you start Googling things like why do I have money and I'm not happy? Leads you to article. That's been my journey. And it continues on.
Well, I mean, it's fascinating, right? Because a lot of people they think that when they're young, the youth is where they'll feel more
Yeah,
happier, but versus when they get older, that's going to be a more miserable time. But your take is the opposite of that.
quite the opposite. In fact, I tell people if you always look back at the past as your best times, it means you fucked up somehow. I was like literally, I have every year is better than the last. I really I love life so much. I go, man, if every year is better than the last, imagine when I'm 60. And then I'm like, God, I don't want to die. I don't want to be 100 and die. I want to like keep enjoying life. So we'll see. I mean, if I live to 100, I have 57, 56 and a half years to go. That's pretty exciting to think that I have 13 more years than I've already lived so far. But we'll enjoy them along the way. I'll have
And
grandkids. It's possible I have great grandkids. Because when I'm 100, my oldest grandchild will be 59, and it's possible 59 that they have their own grandkids. So I could have great grandkids at that point, which is to me a truly amazing thing that I could live to see that many generations.
yeah, I love your mindset, Paul. Like while a lot of people fear old age, like you see it with optimistic perspective. So that's amazing.
I fear it. It's gonna happen. Embrace it. Enjoy life more. Do the things you want to do. And that's it's by the way, that's not going to click. That takes time to really get behind that mentality. The only thing I dread about that is, you're going to lose friends along the way. People are going to die. You know what I mean? Like if I'm 100, there's a good chance that very close loved ones will pass away along the way. Very close, friends will pass away, and it's like, oh, that sucks. It's terrible. You know what I mean? But that's a part of life, and I think losing a friend at 85 is going to be a lot different than if I lost a friend like yesterday. Yeah, I didn't lose a friend yesterday. I'm saying if I lost a friend yesterday, I've been like, oh my God, it's so premature. But I'm already, I have a lot of older friends, so it's going to probably start happening for me earlier than later. But it's a part of life, and I'll get through it, and they'll be in a better place, hopefully.
So, Paul, how can our audience connect with you and get to know more about you and your work and everything that you do?
Well, I have an OnlyFans account, so if you go on OnlyFans and sign up, you can pay for feet pictures.
Oh,
I'm just kidding. Go to youtube.com/everythingmoney. That's our YouTube channel. Our Yeah, that's our community as well. Don't join the community until you've watched videos and you really truly believe in the process. We don't want this to be something where people are just joining to try it out. We want high quality people who are going to add value to other community members. That's very important to us.
that is amazing, Paul. And Paul, I'm really appreciate that you took the time to come to this podcast and share your knowledge and wisdom and your insights into investing. And this is very important for like people that want to succeed in life. And I really appreciate you did that. And I do hope that you take the time to come back at a later time.
That'd be great. Thank you very much.
Yeah, and I want to conclude this podcast by letting my fellow extraordinary Americans know that, hey, look, there's an extraordinary within each and every one of us, and it's our duty to awaken it and unleash it. Until next time, bye for now. Hey everyone, thank you for watching Extraordinary America. If you like what you see, please do subscribe to our podcast and share it with others. Remember that the best investment that you can make in your lifetime is in your own financial education, for it is knowledge that truly sets us free. Also, remember that inflation is diluting your purchasing power, which in turn increases financial bondage. The practical thing to do is to protect the loss of your purchasing power and invest in precious metals or the right cryptocurrencies. Lastly, never forget that you are an extraordinary American. We'll see you in the next episode. Bye for now.